Hello friends, welcome back. In this video, let us understand the concept of accounting treatment of minimum guarantee of profit in the situation of loss. Now, if you have not watched my other videos on minimum guarantee of profit, please do watch it. The link is there in the description, and also I will provide the link at the end of this video. Now let us see the question of minimum guarantee in the situation of loss. So the question is, A, B and C are equal partners with capitals of 20 lakh, 16 lakh and 12 lakh respectively. C is guaranteed a minimum profit of 2 lakh per year. For the year ended 31st March 2020, the firm incurred a loss of rupees 6 lakh. So there is a loss of rupees 6 lakh. You are required to pass the necessary journal entries, prepare profit and loss appropriation account, and also prepare partners capital accounts. So in this one question, I will explain you how to pass the journal entries in the situation of loss, how to prepare the profit and loss appropriation account, and also we will prepare the partners capital accounts. Let's now solve this question. Okay, let us pass the journal entries. The first journal entry what you need to pass is you need to transfer your loss from your profit and loss account to your profit and loss appropriation account. So that will be your first entry. So the date will be March 31st. So when we transfer loss, the journal entry will be profit and loss appropriation account debit, profit and loss appropriation account debit to profit and loss account. This is your transfer entry when we transfer our loss from the profit and loss account to profit and loss appropriation account. Profit and loss appropriation account debit to profit and loss account. So the loss is 6 lakh rupees. So this 6 lakh rupees is transferred to appropriation account. Let us write the narration. The narration will be being loss transferred to profit and loss appropriation account. Okay, so our first entry is done. We transferred our loss from the profit and loss account to profit and loss appropriation account. Let us close this entry with one line here. Now, what is my next journal entry? I need to distribute this loss among the partners. A, B and C are the partners and they share profits and losses equally. So this loss of 6 lakh rupees has to be distributed among A, B and C equally. 2 lakh rupees for each partner. Now when we distribute loss, partners capital or current account should be debited. Now this question is on fluctuating capital. So partners capital account will be debited. In case if this was a fixed capital question, then we need to debit partners current account. Okay, now let us pass the distribution of loss journal entry. So again, March 31st, A's capital account debit, A's capital account debit, B's capital account debit, C's capital account debit, to profit and loss appropriation account. So this will be your journal entry when you distribute your loss. Losses of 6 lakh equally you need to distribute. So each partner will be debited by 2 lakh rupees. Let us write the amount also. So 2 lakh rupees for each partner. So 6 lakh rupees you have distributed. The loss has been distributed. Let us write the narration. Being loss distributed among partners. Now we need to do the adjustment of our minimum guarantee. Let us see once again what is the minimum guarantee of C. C has a minimum guarantee of 2 lakh rupees per year. But if you see here, C is getting a loss of 2 lakh rupees. C has a minimum guarantee of 2 lakh rupees profit, but C is getting a loss of 2 lakh rupees. Now we need to understand how this minimum guarantee will be adjusted. Now in the question, if you see, it is not given who will contribute the deficiency. So in that case, the remaining partners have to contribute the deficiency in their profit sharing ratio. In this question, the remaining partners are A and B. So whatever is the deficiency, A and B has to contribute that in their profit sharing ratio, which is equal. So the deficiency will be contributed by A and B equally. Hope this is clear now. Now let us see what is the deficiency. Minimum guarantee of profit to C is 2 lakh rupees, but he is incurring a loss of 2 lakh rupees. So the deficiency here will be of 4 lakh rupees. How 4 lakh rupees? 2 lakh rupees to cover the loss and 2 lakh rupees of minimum guarantee. Together it will become 4 lakh rupees. So A and B have to contribute total 4 lakh rupees towards C. So A will contribute 2 lakh rupees, B will contribute 2 lakh rupees, and that's how the minimum guarantee will be adjusted for C. So now the journal entry will be A's capital account debit. The journal entry, again March 31st. A's capital account debit. A's capital account debit. B's capital account debit to C's capital account. This is how the minimum guarantee adjustment entry will be passed. So A will contribute 2 lakh rupees. B will also contribute 2 lakh rupees. And C will hence get 4 lakh rupees. Hope you understood how that 4 lakh rupees is coming. To adjust, to cover the loss of 2 lakh rupees plus the minimum guarantee of 2 lakh. So together 4 lakh rupees A and B have to contribute. That's how this entry is coming. 2 lakh rupees will be contributed by A and the remaining 2 lakh rupees will be contributed by B. So A's capital account debit, B's capital account debit, 2 lakh each, to C's capital account 4 lakh. Let's write the narration. Being the deficiency contributed by A and B towards C. Then just close the journal entries. This is how you will pass the journal entries. There are 3 journal entries. Hope all the 3 journal entries are clear. This is the first entry to transfer the loss from your profit and loss to profit and loss appropriation account. This is the second journal entry to distribute the loss. So here you will know how much loss each partner is incurring. Now then last journal entry is to adjust the deficiency. So these are the journal entries. Okay, so that was journal entries. Now, if you want to know all the journal entries related to profit and loss appropriation account and all other basic concepts, please do watch my other videos. The link is there in the description. So now let us see how to prepare profit and loss appropriation account here for this question. So the first thing is we need to bring our loss on the debit side of appropriation account. If you know the journal entries, you know how this account is prepared. So the first thing is to profit and loss account. This is my loss. I transferred my loss from the profit and loss account to debit side of the profit and loss appropriation account. So 6 lakh is my loss. I did transferred here. And then the second thing is just distribute that loss among A, B and C equally. So A's capital account 2 lakh, B's capital account 2 lakh, C's capital account 2 lakh. By loss transfer to A's capital account, B's capital account, C's capital account. That's it. Let us prepare partner's capital account. So this is the format of partner's capital account. Let us first write the opening balances of capital for each partners. So by balance BD, by balance BD. So the opening balances of each partners are 20 lakh for A, 16 lakhs for B and 12 lakh for C. So opening balances of capital, we have posted that on the credit side by balance BD for each partners. Now let us transfer the loss what we have distributed. So loss, how will we write? On the debit side you will write to profit and loss appropriation account. How much was our loss distribution? 2 lakh for each partner. 2 lakh rupees for A, 2 lakh rupees for B and 2 lakh rupees for C. This is clear? First we wrote the opening balances of each partner. It is given there in the question. 20 lakh, 16 lakh and 12 lakh. And then this is the distribution of loss. 6 lakh rupees we have distributed equally among all the three partners. Now we need to adjust our deficiency. What was the journal entry for that? A's capital account debit 2 lakh rupees, B's capital account debit 2 lakh rupees, to C's capital account 4 lakh rupees. Now what you will do in the credit side, C is getting. So in the credit side what you will write? By A's capital account, in C's column please write 2 lakh. 2 lakh rupees. Similarly, by B's capital account, again in C's column write 2 lakh rupees. Then go to the debit side and write to C's capital account, and in A's column write 2 lakh, and also in B's column you write 2 lakh. Hope you understood this, the adjustment entry of deficiency. Please remember the entry. The entry is A's capital account debit, B's capital account debit, to C's capital account. That's why in the credit side I wrote by A's capital account. In C's column I wrote 2 lakh rupees. A is contributing 2 lakh rupees to C. By B's capital account, in C's column I wrote 2 lakh rupees. And in the debit side you will write to C's capital account. In A's column 2 lakh rupees, in B's column 2 lakh rupees. This is how you need to do it. Now all the posting is done. Now let us just find the balancing figure. That will be to balance CD. So this is 20 lakh. 20 lakh minus 4 lakh will be 16 lakh. 20 lakh you can write the total here. 20 lakh will be the total for both the sides. for A. Let us do for B. B, here it is 16 lakh. 16 lakh minus 4 lakh is 12 lakh. You can write the total here it also. Now for C, 12 lakh plus this 4 lakh. 12 lakh plus 4 lakh will be 16 lakh. So total will be 16 lakh. Also, guys, in my next video, I'm gonna come up with one very important question of partnership basic fundamentals. That one question will cover almost the entire chapter of basic fundamentals. So please do watch my next video. Now we have come to the end of this video, and if you liked my video, please give me a thumbs up. You can watch my other videos on the minimum guarantee of profit. The link is floating somewhere up here. You can check that. Now, if you think that this has added some value to you, please subscribe my channel and also share it with your friends. I will meet you in the next video. Till then, take care. Goodbye.